Hey everyone, welcome to this explainer. Today we're breaking down Tractor Supply Company's Q2 2026 earnings. We're actually recording this just days after their July 23rd release. And rather than just reading a dry spreadsheet to you, we're going to unpack the human and the operational story hidden right behind these corporate numbers. There's a totally fascinating narrative here, all about adaptation. So how exactly does a retail giant navigate a bumpy quarter and a massive $71.7 million write-off? It's a genuinely fascinating question because, look, this earnings report isn't just about accounting. It's a real-world look at how a massive company balances a major financial hit by leaning heavily into its unshakable rural foundation. Honestly, it's a masterclass in strategic pivoting. Just a quick heads up before we really dive into the weeds. These corporate projections are forward-looking statements, which means they are absolutely subject to macroeconomic pressures and tariffs, just like they noted in their SEC filings. So definitely keep that broader economic context in the back of your mind as we go. All right, let's jump right into Section 1, a bumpy second quarter, navigating the friction. There's a really stark contrast to talk about first. Tractor Supply saw positive sales momentum in April and June, which is great. But that was heavily offset by unusually adverse conditions in May. Basically, they hit a very tough month right in the dead center of the quarter. Specifically, they noted a noticeable softness, basically a big drop, in consumers buying those big-ticket seasonal items. And that really reflects those larger macroeconomic pressures we were just talking about. Moving on to Section 2, pruning for profitability, making the hard cuts. Now, to counter that seasonal friction, the company had to act decisively, and they ended up taking a staggering $71.7 million impairment and other charge right on the chin. This was specifically for their PetSense brand. What does that massive $71.7 million charge actually translate to in the real world? Well, it means they made the incredibly difficult, calculated decision to shutter roughly 75 PetSense retail locations. So this isn't just a paper loss, it's a physical reduction in their footprint. It's a calculated move to stop the bleeding in underperforming areas so they can, refocus their energy elsewhere. But here's the twist. They aren't abandoning the pet category entirely. Not at all. At the exact same time, they absorbed $9.5 million in acquisition costs for VIP pet care. This signals a highly strategic shift rather than a full retreat. Think about it. They're closing standalone underperforming pet stores, but acquiring a pet care service. They're essentially keeping their hands in the super lucrative pet market, but entirely changing how they deliver it to the consumer. Okay, Section 3, the core remains strong, the unshakable foundation. Because they are so deeply embedded in the communities they serve, Tractor Supply's core customer engagement and retention remained incredibly healthy. Think about it. Despite the bumpy quarter and having to close those 75 stores, when things get tough economically, their core demographic doesn't just walk away. That loyalty is absolutely built in. And the reason that loyalty is so ironclad is because their foundational strength lies in everyday, needs-based categories. We're talking about feed for livestock, agricultural supplies, essential outdoor equipment, stuff you literally have to buy to maintain what they call life out here. So even when those big-ticket seasonal items take a hit, these everyday needs-based categories continue to perform really well. It completely stabilized the whole ship. Which brings us to Section 4, reallocating for future growth, modernizing the rural retail experience. So they are actively taking the capital saved from those store closures and pouring it into modernizing the rural retail experience. And they're doing this through a rapid-fire list of specific investments. First off, they're increasing the pace of their Project Fusion remodels and relocations, which means upgrading the physical layout and flow of the stores. Second, they're advancing localization, making sure the store in your specific town actually stocks exactly what your region needs. Third, they're scaling up in-store pet washes, which, by the way, ties perfectly back into that VIP pet care acquisition we talked about earlier. And finally, they are enhancing their high-tech tractor vision capabilities, seamlessly bringing modern retail tech straight to the rural customer. Now, why does this matter to you as an observer or an investor? Well, because this entire quarter isn't just a story about a loss. It's actually a calculated pruning designed specifically to fund those operational initiatives. Basically, they cut the fat so they could reinvest directly into the core customer. They know for a fact that these are the initiatives that generate the absolute strongest response and the highest returns from their most loyal base. And all of this builds to a massive operational climax. Right now, they're taking those freed up funds and they're leveraging them to accelerate what they call final mile delivery. Their ultimate goal? To roll this out to the vast majority of their stores by the end of 2027. They want to get the heavy, bulky stuff, the feed, the big equipment, directly to the farm, faster and way more efficiently than ever before. It's a massive logistical upgrade, entirely paid for by optimizing their current footprint. So when we step back and really look at the whole picture, this dense Q2 presentation is truly a dynamic story. It's a story of weathering an economic storm by cutting the dead weight and aggressively doubling down on a core community. They didn't just panic over a bad May, they optimized for the long term.
Which leaves us with this final, provocative thought. In a mixed economic climate, is intentionally shrinking one part of your footprint actually the masterstroke required to dominate the market of the future? Like, is cutting 75 stores today the ultimate secret to winning the rural retail market of tomorrow? It's a really bold, fascinating strategy, and one that we will definitely be watching unfold. Thank you so much for joining me for this explainer, and as always, keep questioning the numbers behind the headlines.